This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
Hey, everybody. Welcome back. Another episode, Real Estate Investing 365. Today, I got a pretty big guest here. His name's Mark Kenney. He's from he owns Think Multifamily. He's an apartment syndicator. He's got a little over 6,000 units based out of Texas, I believe. Is that right, Mark?
Yeah, Dallas. Yes.
Dallas. Okay. Well, thanks for being here. I appreciate it. Why don't we get started, and you can go ahead and just give us a little background, like where you came from. I know you came from like smaller multifamily. Then you got into the syndication space and just really blew it up. So give us a background of your story.
We did. Yeah. I'm in Dallas now. I grew up in Michigan, and I started buying small multifamily with my twin brother when we were still senior in college. So we're 22, 1 to 4 units. And mostly it was because we didn't have a grandpa or dad or anyone buying anything. It made a lot of sense to us. We kind of struggled as kids as far as financially. We had food and we had a place to live, which is more than a lot of people for sure, but really no extras. So we said, hey, we love real estate. Let's start buying it. We bought it with our own money and things like that. I didn't know what syndication was. This was like 26 years ago. And I went to school for accounting. I was a CPA for a while, and then did IT consulting and continued to buy smaller units. Mm-hmm. And then 2013, I had my own IT business. I was doing pretty well in, but from a financial standpoint, but not from a personal family standpoint. I used to have to go, hey, I work 80, 85 hours. I'm like, that was pretty light. Yeah. I would sleep about 3 hours a night consistently, 7 days a week. Spent time with my kids, ignored my wife. And then in, several years back, she was like, hey, this is not working. And you better do something else or I'm going to leave, basically, which threw me off guard completely. Yeah. Because I did make good money. I provided for the family, did a lot with the kids, but I ignored her. So I said, if we're going to do it, we're going to have to do it together. And that's when we started looking at syndication. A friend of mine was doing a syndication. I invested passively with my retirement funds with him. He's like, hey, it makes a lot of sense. I kind of good with numbers just because of being, accounting background, things like that. And just started saying, okay, I'm going to somehow do this, and start looking at deals, 100 unit type deals, and took about a year to find a deal. And we almost gave up. We were looking at franchises and self-storage and pretty much you name it, we were looking at it. And we luckily settled on multifamily and started buying, larger a little bit. And then now we've been, like you mentioned, we bought probably about 7,500 units since then. And they currently have over 6,000.
Wow. Yeah, that's awesome. It's amazing that you were able to move from, the smaller multifamily deals and then get into the syndication. A lot of people are doing syndication now, but it just seems like the majority of people that they never kind of get out of their initial niche that they get into. It's kind of like, I always say people, as they grow older, they get into high school and all this stuff, and then they get into college. Everybody's always growing. But then adults get to this spot in life where they stop growing. You know what I mean? Right. And so I always wonder what that is. They get stuck in a career and they're there for 40 years and they never really make more money. But it kind of ends up being like the same thing with investing a lot of times, whereas people like get into one niche, they've like grown to that, but then all of a sudden they stop. And it's like, well, maybe that's just their comfort zone or whatever, but it's you've obviously continued to grow, which has been super successul. So how did you... Go ahead.
Yeah, it's definitely comfort zone, right? Because I had a wife and a couple of kids and had to support them. I did not think I'd replace my IT income. I didn't think I'd be able to do it because I'm making really good money, IT business. But my why was basically, hey, I'm marital problems for sure, and so my why was I have to do something to make it work. The thought of our kids going through that was like devastating to me, frankly. So I had a big enough why to make it happen.
Yeah, no, definitely. That's a big thing too. I mean, I kind of have the same. I'm probably not working as much as you were, but I do seem to work a lot on power lines and stuff right now. And that's part of it. Just trying to get away. I hate working the nights, and I hate like going away on, for weeks at a time or whatever. It's just not fun. So, I definitely feel you on that. When you got started in real estate back when you were in college with your twin brother, how did you guys even how did the real estate come up? Because you said you didn't have really anybody in your family that did real
Yeah.
estate or investing. Like, how did that kind of click for you?
I don't even know, frankly. We were both very analytical. He was a CPA, went for accounting too. Um, both were good with numbers and things like that. And it just made sense to me. Like it was tangible. I could touch it. I could feel it. And I really don't know. We always liked real estate as kids.
Uh-huh.
And then we always thought we would start a business together. At that time, it was going to be like we're kids sporting goods store or something along those lines, right?
Yeah.
And I think we were just like, well, hey, we see our dad kind of working pretty much nights and weekends and trying to fix the cars are breaking down all the time and toasters break and whatever it was, he was doing it. So we said, hey, what's a way we can invest? I didn't really like the stock market as much, even though I fell into investing that through my 401k and things like that. But I think it was just that it just clicked with us and it made sense. But we didn't have anyone. There's not an event I remember in my life. I read a book or someone told me about it. It was just like, hey, let's start looking at real estate. We said, okay. And we
Yeah.
just decided together to do it.
Yeah, no, I'm kind of the same way. I didn't really have anybody either, but it just kind of makes sense that you buy something as long as your payment's much less than what you're
Right.
bringing in, you get some cash flow and it like
Right.
makes sense. Whereas you buy stocks, it's like, okay, buy it, but how do I get money back? A lot of people are
Right.
like,
And in the
what do I
world,
do?
events happen, right? I mean, something
Yeah.
happens in another part of the world and affects my stocks. I mean, why? I won't say there's no logic, but to me, there's no logic in the stock market. So I'm not saying people can't do well with it, but real estate makes a lot more sense to me.
Yeah, no, me too. Definitely. Okay, cool. So you kind of grew your small multifamily business, you grew it up, and then you decided like you got busy and everything. And you, like you talked about, you had this kind of come to Jesus moment and said, hey, I need to do something different here. So how does one go from like, what was your first steps to getting into the syndication market? You said you had passively invested in your friend's syndication.
Right.
So you kind of had a little idea of what it was, but like, you know, how do you even go about starting, like looking at bigger deals, contacting brokers, analyzing deals, all that stuff? How'd that happen?
Right. So we were in a group for a while, but really the way it happened for us starting out was we had a partner that we met at a meetup that had more experience than we did at first, and we kind of hit it off from a goals standpoint. We did several deals together in Dallas area, so it was kind of more someone had already done it before. If you're going to have partner with somebody, you both have to bring some skill sets. I was definitely more the numbers guy. He was more a bigger numbers guy, but I was very much more the detailed numbers guy. We both had broker relationships, working with brokers. I raised the majority of the capital, which was, petrifying to me.
Yeah.
But that's kind of where we were. And he had a bigger balance sheet. So he had some Fannie experience, things like that, which I didn't have at the time. So it was kind of teaming up with somebody else that already done it before.
Okay. Yeah, that's probably key, especially the broker relationship. So you mentioned that you had some broker relationships. How did you get those relationships before really getting into the bigger deals?
Yeah, I think when we started, it wasn't as popular, frankly. A lot more people in multifamily now than when we first started. And it wasn't as competitive as it
Yeah.
is now. So I simply went to different events, met different brokers there, and then started setting up appointments to meet them and then also to tour properties. You're much better off when people say, hey, I'm going to talk to a broker about, hey, this is what I'm looking for and things like that. That's fine. But you're much better off talking about a deal they have. Keep in mind, they don't get paid unless they sell a deal. So
Yeah.
if you have an interest in a deal they already have listed
Mm-hmm.
and you're going to go tour the property, show interest, that's how we got our first deal. We toured something I wasn't really interested in, but we bought that deal because there was a second deal right next to it that the seller didn't have listed. But that deal by itself I wasn't overly interested in, but I wanted to go meet the broker. First time meeting them face to face, build that relationship. You basically have to get off your butt.
Yeah.
You might have to get on a plane potentially, depending on what you're trying to buy, and meet people face to face. Not every week, not every month, but you need to build those relationships. So at that time, it was pretty easy to get along with. They could tell we've done our homework. If we call them about a deal, I didn't ask them obvious questions. They already answered in their offering memorandum, which is kind of the marketing brochures and things like that. And I was asking good questions,
Mm-hmm.
kind of asking them, hey, well, how did you come up with this? And challenge them here and there. So I think it was just more of a building rapport and asking good questions at the time. and then show them that I'm interested, and then eventually start making offers on
Yeah.
deals.
So you think that still applies to right now, today, where the market is, like going after and inquiring about deals that are listed? Because you hear so many people talk about, oh, I don't even go on LoopNet because the deals are where deals go to die and all this
Right,
stuff. You
right.
know what I mean?
Yeah.
Which I have my own feelings about that, but I'm curious what you think about that, especially where we're at.
I think most deals that are listed in general in a lot of markets make
Mhm.
absolutely no sense whatsoever for our investors and myself. They just don't.
Yeah.
With that said, it doesn't mean you're going to have to start somewhere, and you want to start getting deals to kind of see what makes sense, what doesn't make sense. Analyze deals, even if they're not good deals, just get experience with it. We don't really look at deals that are listed right now. I don't, anyways. They're all coming from broker relationships we bought deals from. But how do you get your first deal, right?
Hmm.
So partnering up with somebody that's already been in the market. The brokers are going to go to the same buyers that they've been buying. We have a deal in a company and brokerage firm in Georgia. We bought like 13 deals in 2 years from. We
Wow.
obviously have their attention, right?
Yeah.
And if you're new to it, and partner with somebody, whoever it might be, and if you're trying to find out, as far as getting deals sent to you, I always tell people in our group, hey, look at the website and call the youngest guy on the website, because typically they're new. They don't have a buyer, pool yet. The guys that are, like me, gray hair and stuff like that, been doing it for whatever, 20, 25 years, they have their 6 buyers, whatever you want to name it, already. They don't have to go, try to find new buyers.
Yeah.
So pick the youngest guy, try to build a relationship with him. He's eager, you're eager, and try to get something working that way.
Yeah, it's so much different than residential, especially when you're moving from like the small multifamily residential space. It's like you go to a residential agent, and they're just like, rah, they just want to help you. You know what I mean? Because
Right,
I mean, that's just kind of, not all of them, but that's just kind of the way it is. But it's more like you're working for the commercial broker
right.
almost in the commercial space than the other way around. So that's interesting. So let's dive into your first deal. Your first deal was a 64 units, wasn't it?
It was, yes. Yeah.
Okay. And
It was 32 originally, meaning 32 units were listed,
okay.
and it was smaller than I wanted. But first time meeting the broker, met him and literally standing there talking to him. And he said, well, the seller has this property. It's like 300 feet away, literally, right
Yeah.
here, and 32 units. He might be interested in selling that too. So it turned out to be 64, still a little bit smaller than we wanted, but going from 2 to 4 units to 64 was a big jump.
Yeah. Okay. So real quick, how did you identify first when you decided to get in the syndication space? You had your partner that you had met. How did you guys identify your criteria, what to look at? Because I know a lot of people, they kind of get that shiny object syndrome, or like that they're afraid to miss out on a deal. So they tell a broker, I want everything from a 10 unit to a 100 unit and just send me everything. Right. Well, that doesn't really work because there's tons of stuff out there and the brokers don't take you seriously. So how did you guys define your criteria? And then how did you find the broker and all that stuff?
Yeah, did a horrible job at defining criteria, frankly.
Yeah.
Um, I was looking at, like you said, 10 units and 500 units. There's no way I was going to be able to do a 500 unit. I didn't really want to do a 10 unit. So really not very, very good at first. Then
Hmm.
we kind of refined a little bit as we started looking more. You kind of see what you like, what you don't like. It could be physical characteristics, it could be certain areas. If someone calls me and says, "I have this property on such and such drive," I'm like, I don't even want to look at it, because it is very critical to define your criteria for two purposes. One, for your investors, right? So
Hmm.
investors know what you're looking for. You could define your criteria and think it's perfect and find a deal that's perfect for you, and all investors say, well, I don't like that deal. Well, if you're trying to syndicate, that's a big problem.
Yeah.
And then with brokers, it definitely shows that you've done your homework, right? And it helps them not waste time with you. So if you're looking at physical characteristics, flat roofs, chiller system, which kind of heats and cools the whole thing, it could be occupancy. Hey, you know what? I only want Fannie or Freddie, so it needs to be 90% occupied for 90 days or more. Those type of things, and location wise. But you know what? We did not do a very good job at first with it. First year, I think we just did a horrible job with it.
Is that kind of why it maybe took a year, is because you didn't know what to be specific about?
No, I don't think so, because we looked at a ton of deals. I mean, every
Hmm.
deal, like you said, I don't want to miss that one in a 1,000 deals it comes across. That might be the one. So I spent tons of time analyzing deals. I think it was more, we looked at a lot of deals, but we were also at that time, we're looking at other things because we didn't have any multifamily that was of size. So I was looking at, a half a dozen different franchises. And I'm like, well, I could do these things. I have the money for my IT business to start another one. And then it's just starting another business again. It was like, why would I do that? I'm going to be in the same spot I am right now. We looked at self-storage, which I think is a good asset class for sure. We're going to build, develop. And then I got really scared because it was way too big from a price standpoint.
Yeah.
So we looked at a lot. We looked at custom development for subdivision, things like that, custom homes. It was just, we were distracted. We didn't have a focus on exactly, because the fact was, we didn't know if it was going to work. I mean, in reality, like I mentioned, we came close to just giving up on it and say, we don't have anything yet. It's been a year. Maybe we need to do something else. It's not working. But it was because of the distractions.
Okay, cool. So you'd met your broker. He was sending you some deals. He sent you this 32 unit and you went out there and you actually went to look at the property.
Correct. Yes.
Okay. And then while he was there, he said, oh, by the way, the owners own this one across the street, which was probably kind of he did it on purpose, you think?
Yeah, on purpose for sure.
Yeah.
We've done the same thing. We sold a property and we really were probably mostly trying to sell one of the two.
Uh-huh.
And we told the broker, hey, if someone really gives us a good enough price, we'll sell both.
Yeah.
But we're only listing this one because the one had already been performing really well. The other one is still kind of getting into performance. It was kind of a little bit lagging behind, but we ended up selling both together. So yeah, it comes down to, price point, frankly.
Yeah, for sure. All right. So did you guys already have like a group of investors like ready to go before you had this property? Or did you kind of find the property first and then find the investors?
We definitely had people on our list, whether they were investors or not. We really had no clue.
Okay.
Unfortunately, we had discussions with certain people, but it's when push comes to shove. I mean, there are a lot of things that go into an investor making a decision to move forward or not. Right? It's timing for one. Maybe they just invested in something else. It could be, hey, I have a medical issue, or I'm going through some sort of whatever it might be. Right? It's timing. So we didn't really know. It was $1 million raise, which at the time seemed like, definitely a lot, and was very nervous and scared about doing that. But we had a number of people on our list for sure, but we couldn't tell whether they're going to be investors or not.
Yeah, no, that's true. I mean, it never comes down. They could say yes all day long, but until they wire the money over,
That's exactly right.
it doesn't really matter what they say. Okay, so what type of property was it? Was it a B class, C class, A class? What type of property was it?
Mid 80s construction, 85 construction. The first 32 that was actually for sale was built as condos. So definitely nicer. I mean, it was brick, mostly brick. Had, a garden tub plus shower, double vanities, high ceilings, things like that. So
Mm-hmm.
a nicer asset for sure.
Mm-hmm.
Needed a little bit of work, mostly on the interiors, but that was a nicer asset for sure. So I would say, kind of a B-ish asset.
Okay, so that's kind of interesting. They were built as condos first, and you see that a lot of times. So they were built as condos originally, and then transferred over into an apartment complex.
Never were condos, actually. They built them as condos, never sold as condos. Doing fractured condos and stuff like that. If you look at that, you want to make sure you have control of the HOA. If you don't, I would recommend, personally, I wouldn't do it.
Mm-hmm.
With this one, they built them as condos, so they were nicer. Never sold them as condos. They sold it as an apartment complex. There are 32 different, property tax, assessments and things like that. When we got to closing, about, I don't know, maybe a week before closing, the lender said, oh, we did some research and we found out there's an HOA on the property. And the seller's like, there is no HOA on this. There never has been. And they said, well, in 1980, I guess 84. 1984, there was this property and 5 other properties. 4 of the other 5 properties never even built before. They never built them to this day.
Oh, wow.
All part of this HOA. And we got around it, but it was definitely a hassle to get around that.
Yeah, that's interesting, huh? The owner didn't even, he's like, no, I don't know what you're talking about, but.
That's right.
Huh. Okay, so what kind of financing did you end up getting? Fannie or Freddie or what?
We got a Freddie.
Okay.
Small balance. So biggest thing with Freddie, small balance, is you don't get rehab.
Okay.
So we had about $2,700 door rehab, which is pretty light.
Mm-hmm.
We got about 80%. I think the rate that time was about, I think it was just shy of 5, like 4.9, like that. Rates were, a little higher at that point in time as well. It was a 12-year loan. We actually refinanced that property about a year ago into new debt.
Okay, so when you were raising the money with the investors, because this was in 2013, right?
We closed on that in 15. So
Oh,
with 13 is when we started, and then it took us like a year pretty much to start getting going, and we closed that in 15.
okay. So when you were raising the money from investors and you first got this deal, was your plan to keep it for a very long time and refinance, or was your plan to disposition the property after 5 years, kind of no matter what?
Disposition
Yeah.
after 5 years, that was the original plan, which can change as market changes and things like that. So
Hmm.
I think a lot of deals, in order if you can cash flow them, great. But if you tell investors, my personal opinion, you tell investors, hey, we're going to return this to you, and let's say our expectations after like a 5-year hold or whatever, if we can do that a lot through a refinance or a supplemental loan, I personally rather do that. Still
Hmm.
hold the property, provided you like it. Most people say that's tax free if you do a refi or supplemental. I would say it's tax deferred,
Yeah.
and even that you're supposed to use those proceeds to reinvest in something else. But there are a lot of advantages doing a refi. But at some point in time, if you can't do those big pops like in an equity return, then I think you should look at selling the property.
Yeah, for sure. Okay, cool. So, and then did you bring in your own management company or you hired a management company?
We hired a management company for that
Oh,
property, and it was harder because 64 units is odd. They're it's not big enough for the 100+ unit management companies in general, and you got those other guys that manage like the 10, 12, 20 units, so it's kind of harder. Our payroll ended up being higher, and still to this day is higher than I want, because you kind of need somebody sitting around there when people drive by and want to lease,
mhm.
but you can almost have the same staff for 100 units versus 64. So you're going to pay typically higher. Not always, depending
Yeah.
on what the requirements are, but that can happen.
Yeah. So did you end up finding a big company that would take a smaller property or a
We
small
did.
company? Okay.
We did. And then we got rid of them and we got another one, same thing. But that same company manages other properties for us in Dallas as well.
Okay. What are some good, you said you got rid of that company. What are some reasons why a company might not work out, or some things to look for in a property management company?
Yeah, I mean, before you decide one, you want to make sure it's not always about price, right? But you want to make sure that they manage similar assets, and they really didn't. I mean, it was hard to find because 64 units is odd.
Yeah.
Similar assets, similar markets, they're in that market and things like that. In this case, the on-site was reporting things about leases that simply was just not true.
Oh, okay.
So we had like supposedly 7 vacancies in a single day, which obviously didn't really happen. And then they said they leased 5 more the next day. I mean, it was just kind of one thing after another, frankly, just lying to us. So we found that and got rid of them. And I think performance wise, it's really tough to switch from one management company to another. Just
Hmm.
is. But if someone's doing something from an unethical standpoint, then there's no question. You have to get rid of them.
Yeah.
In this case, I think they're being unethical.
Yeah, I agree. Okay, cool. Well, there's tons of stuff we could dive in, like little
Yeah.
intricacies about this property. But one thing I think a lot of people are curious about is that, when they're buying smaller multifamilies, it seems like, really pretty quickly you can make enough cash flow off the properties to like make a significant difference in your life. But is that the same with syndicating properties? Because you're not making a ton of cash flow, are you? It's more like you get you get like the acquisition fee and a disposition fee and
Right.
maybe a management fee in between, but it kind of takes some time to get cash flow built up. Is that correct? And then what
It
does a
does.
typical
I
structure
mean,
look like?
it does, depending on how you structure it. The
Hmm.
first deals we were doing an 80-20 split, no preferred return or anything like that. And people aren't familiar with preferred, just think of it as we do 8% preferred return means the investors get the first 8% before the sponsors receive anything, and then we would do a split after that. We usually do an 8% pref now with a 70 split to the investor and 30 to us. But yeah, no question, when you're doing preferred returns, the syndicator won't make as much on cash flow. They do take, typically take a 1 or 2% acquisition fee based on the purchase price one time. Um, the biggest difference between smaller multifamily, let's say 4 units below, and 5 units and above is the way lenders look at the property. They look at it more as a business. And if I buy a house, I try to sell a house, appraiser comes by and says, okay, there's a house next door selling from this, the one down the street, and that's what it's worth. Well, with larger multifamily, you can really increase your net operating income either by increasing revenue or decreasing your expenses. And I won't go to all of the kind of nuances behind it, but think of this one thing, and it's not just made up, it's reality. Right now it has 6 cap, which is pretty conservative for the most part. Every dollar I increase my revenue or every dollar I decrease my expenses, somebody else would turn around and give me $16 of value. So every dollar so if you go to work and make $16 for every dollar, that's what we're talking about here. You just can't do that in 4 units and below, what we were doing. So your ability to build your net worth and your ability to do a refinance or a supplemental loan and pull out potentially significant amounts of money or sell a property, it's night and day. You just can't do it 4 units and above and below. So 5 and above is typically where the lender will consider it more, and a buyer, right, will consider it more as a larger multifamily.
Yeah, it's funny. I see like portfolios of residential properties being sold, and then oftentimes they'll market it as like a value add or increased operating income or whatever. You know what I mean? Like the way they're marketing it, but it's like that doesn't really work. You know what I mean? Because even if you have 100 single family houses, well, they're all still going to be appraised based off of what the other residential properties in the area are appraised at. But if you buy 100 unit building, that makes a huge difference, like you said. $1 raise is 6 cap, $16 increased in equity. So that's awesome. Okay, so how did you guys kind of go from that first property to now? You've bought 7,500 units. You have 6,000 units under management. How did you scale to that extent in just really 5 years, I guess?
Yeah, so we went from 64 to 208 was our next deal. So that was $2.8 million raise. So again, very scary. And then we did a 255 unit deal right after that. And we were buying just in North Dallas at the time. So we really started scaling when we started looking outside of Dallas. So we bought many other places in Texas, but we also own in Georgia and Florida, Tennessee, Alabama. We have one in Kansas City right now as well. When we started looking at new markets, we saw Georgia in particular. We were in Atlanta. It was like 3 years behind where Dallas was. We were like, this is exactly what Dallas was 3 years ago. And my twin brother lives there now in Atlanta. So we started going there and started getting deals. Price points were way lower. There were, interiors were not rehabbed. Dallas was kind of running out of inventory for value add. And so really by going to other markets is how we started scaling. And we would use at that time, our kind of reputation in the Dallas market and say, hey, you can talk to these brokers that we've been working with in Dallas, and it's a pretty small world among the brokers. And that's how we started getting into a larger scale. And then it became more, how can you keep adding value? Everyone, I think before we started too, I think you might ask too about, I was doing it with one other guy at the time. A lot of work for 2 people for sure to do a deal, but pick something you're good at. Whether if you have money, hands down, it's easier. It just is. You can do a lot of things. You can sign a loan potentially. You can put earnest money down. You can invest. If you don't have money, you have to look at other alternatives. I can get good at finding deals, which you need someone that has experience for that, really, in my mind. Mm-hmm. You can analyze deals. You can raise money. Those are all ways. So get really good at something. And you don't have to look at somebody else and say, oh, that person got really good at this, so I'm going to do the same thing. Well, you're wired a certain way. If you like numbers, great, get good at analyzing deals. If you hate numbers, you can become proficient, but it's probably not gonna be your thing, right? You're not gonna be happy doing it. So it was Steve Jobs and basically do one thing really well, right? And That's the same thing with here. You can learn all the different aspects. If you say I'm gonna be an expert every area of syndication before I start, it can take you a long time to do that. So get good at something, offer that value to somebody else that's already been doing it, and then come into a deal with them.
Yeah, for sure. And then I guess when you partner with people too, they have their own group of investors that they can bring to the table as well. Because that's kind of the next issue. You guys kind of grew quickly, the 208 and then 250 or whatever you said. So how you're not just using the same group of investors, I would imagine. How did you kind of find more investors? Nowadays people get podcasts or start meetup groups to like get their name out there. How did you find more investors to buy more deals so quickly?
We kept going different events,
Okay.
really. And then we started doing some webinars a few years back. Then we started doing meetups, started our own meetups. Now we have several of those. And then we started doing our own events. Um, it's gradual. It can be slow. It can be frustrating. But, our group, as a group, last year we did over 50 million in equity.
Wow.
So definitely a lot, but also very scary sometimes, frankly, trying to trying to
Yeah.
get all the deals closed, right?
Yeah, for sure. So going to other people's events and just like networking and talking, that comes up on almost every single episode I've done out of 30 episodes so far. It's like networking is number one, is like the key to everything, but it's hard for people to get around their mindset of like getting in that next group. People get stuck in their own little circle, in their own little
Right.
world, and they're afraid to get out into the, step up the ladder and meet
Yeah.
more people. But
Well, we
that's,
sponsor a number of events too.
mhm.
Really, we don't really go to any events I'm aware of right now just to meet people. And really out of respect too for the people running the events, we'll sponsor events. And then I'm not suggesting you have to do that if you're just doing syndication, but we have a full group. So we'll sponsor and meet people that way. We have a booth. We'll pay for breakout sessions. I mean, some of the stuff gets pretty costly, but it's
Mhm.
well worth it. You get a captive audience, and that's how you meet new people.
Yeah, for sure. Okay, so you guys went up, you guys really started to scale when you started to go to other markets. You mentioned Dallas, or I mean, Georgia, and then Kansas City, and all these different markets. How do you kind of find and identify a new market, especially now? Let's talk about how you found a new market, and then how somebody now can identify a market that would be potentially good.
Yeah. So at the time, it was a little bit probably luck. My brother had just moved to Atlanta,
Hmm.
and I really didn't know much about Atlanta at the time. We were buying in Dallas, still looking heavily in Dallas. And so we went there. I'm like, a lot of activity going on here in Atlanta, kind of similar to Dallas,
Yeah.
a little behind. And so we said, my wife and I are like, we should probably look at some apartments here. It seemed like, oh, I don't know if I want to do that. We're already so ingrained in the Dallas market because it was still, we could still find deals there. So that was just kind of pure luck. My brother moved there, and then it's the same thing: job growth, population growth. It's going to be, how easy it is it to evict people. Um, Fortunately, my brother was there. I have a partner there too that's lived there for 27 years. He
Hmm.
was a Marcus Millichap broker, so he kind of inside information. A lot of it is it's usually like, hey, someone in our group, for example, I grew up there, I live there, or I have someone there, I've been there, and they kind of start looking at it further. I don't look at every single market in the U.S. Kansas City, I wasn't even looking at. We had about half a dozen people in our group looking at it. The more they've looked at it, now I'm like, I like the market a lot, I really do. But I
Yeah.
wasn't looking there. But it's going to be, there's stats, and there's also reports like CoStar and Yardi and things like that will show you population growth, job growth, how occupancy has been, new supply coming online. Can they build new units or not? Things like that.
Yeah. Okay. Definitely. Do you think with, everybody asks this question, so, and I get this question all the time, with where the market is and everything's going kind of crazy and cap rates are compressing, and um, is it still viable to like go out, and if you're a new investor, to go out and find these deals if you're not getting the best deals right now?
Hard by yourself, I think. I do. If you're going to
Yeah.
buy a deal that's marketed, I think it's also very difficult in the primary markets. I
Mm-hmm.
mean, Dallas and even Atlanta itself. So we're buying a lot in kind of secondary markets.
Mm-hmm.
Um, and that's just where the returns are, frankly. So if you're trying to go get on a broker's list, get their email blast sent to you, it's going to be really difficult. You kind of want to hook up who's done it before, already has a broker relationships. We get off market deals all the time.
Yeah.
And I'm not saying, I tell people it doesn't mean we get a steal of a deal. We get better deals for sure with a lot less competition. Some cases we're the only group looking at it. Other cases there are 3 or 4 other groups looking at it, but there aren't 100 groups looking at it.
Yeah.
That's the difference. And it's probably 25% of the deals we've gotten, we were not the first selected buyer because our price is lower. And the first buyer, kind of flakes out for whatever reason, and we come in and get the deal at the same price we were before.
Yeah.
So we're a number of deals we're getting, from people say per unit or per pound, how much you buying it per unit, right? We're getting some pretty attractive pricing right now.
Okay. And you keep mentioning the group. So your group is your Think Multifamily. Um, is it a mentorship program? Is that what it is?
It is called Family Syndication Group, and it is one coaching for people that want to syndicate deals.
Okay, so let's dive into that a little bit. So why is it you've kind of mentioned a whole bunch of times like partnering with people and just finding somebody that's already done it? Why is it so essential? Another reason to find a mentorship program that can kind of like accelerate your path. I mean, people can do it on their own, right? I'm sure it
Right.
just takes a
Oh
longer
yeah.
time. So, what are the benefits to being part of a mentorship?
And I would say, people say, "Oh, you're saying people should have a mentor because it's self-serving." I would say, I'm not saying you have to have a mentor. I'm saying you should have somebody. It could be a partner. Forget a mentor.
Yeah,
Maybe you're paying zero for it, right? But someone that's been there, done that. I can tell you the number of mistakes you make early on. We make way less mistakes. We were able to identify issues much faster and be able to correct them much faster. And you're not talking about, $10, $100 mistakes. You're potentially talking hundreds of thousands of dollars of mistakes, right?
yeah,
So having that experience, we've done, whatever, over 40 deals. You're going to learn something by doing that many deals. Something else comes up every time. And then just having if you can't do it all on your own because of certain things, maybe your net worth isn't there, your liquidity. The advantage, at least to our group, is everyone really does partner together. It's very collaborative, and a lot of the groups aren't like that.
hmm,
I also do all the one-on-one coaching. We don't have any sub coaches like most other groups, so that's what I want to do, and that's what we do in the group. But it's really having access to a built-in team, our CPAs, our attorneys, our mortgage brokers. It could take you a long time to build that yourself, and you're definitely gonna pick some wrong people along the way. Well, we have the best of the best. There's no question about it. A
yeah,
built-in team, someone that's been there, done that, made mistakes what you to avoid. Someone you can leverage their track record. If someone calls and said, "Hey, I'm partnering with," the broker might already knows me, right? I'm partnered with Mark, and whatever there, there's no really it's instant credibility, frankly.
right.
And then, like I said, the other aspect is you want to do a bigger deal. You don't have net worth, liquidity. You don't have earnest money. Somebody in the group will put money in for it, sign the loan. I sign a bunch of loans for people as well. And it gives you kind of the ability to buy bigger deals that way than starting small.
Yeah, well, especially like we've mentioned, like right now where the market is, it could be catastrophic if you find somebody that has a net worth and okay, you're all approved to buy a deal that's 100 units, but you haven't really done it before. Right now is like it could be a very like tipsy point to like get into a
Right.
deal that just barely makes sense. But if you have a group of people that have done it before, they're like, listen, don't do that deal. You're like $5 million overpriced or whatever the
Right.
problem is. Like if you were in 2012 or 13, maybe would have been easier to do by yourself because you had more wiggle room to make a
For
mistake.
sure. Absolutely.
Yeah. Okay. So can you how how does your group how does it operate? How is it structured? What do people do? What are the steps to get into it? Like how does the training go? Everything about it.
So people can get in at our events, but they don't have to wait for events. We're doing like 4 events this year, and then we have 3 additional events that are closed just for the group, so it's not open to the public.
Hmm.
So we have ongoing training like that. We have a closed Facebook group. Everyone in the group gets all the names, contact information to everyone in the group as well. So I don't know anyone else that shares that, but we do. Um, and then we have scheduled calls as a group, and then unlimited one-on-one calls. And we do things like a 2-day deal analysis workshop, and we do a lot of different topics, deep dive. End of the day, we have 14 steps to the process. We did not invent multifamily investing like some guys claim they did today, which is pretty
Yeah.
funny in my mind. But reality is, we do have our own spin on it, and people really do. It's called Family Syndication Group for a reason. People work together as a family, help each other, bring in people that are brand new onto a deal, and let them get experience that way. We had like 78% of people in 6 months or less get into a general partnership spot. That's a lot.
Yeah.
But it's really because people are open to bringing other people in and helping them. And then, I'll partner with people if I like the deal, sign on the loan, help raise capital, tell brokers I'm partnering with you and things like that. That's not required, but it's an
Yeah.
option there as well. And other people will partner as well on deals. So, we did like 4,500 doors last year with a pretty relatively small group. It's a lot, and we'll hopefully do that many this year if we can find good deals.
Yeah, for sure. So now is it like a one-time payment, or you guys pay monthly, or how's that work?
It's a one time. You can spread it over like 4 months, so not a year, but over 4 months. And then if you want to renew after the first year, there is another additional payment.
Okay. If so, since we're not, doesn't seem like we're just diving in on um your group here, your mentorship program. What is something somebody can look for in mentorships that might be uh good, right? Like, because there's so many out there. It seems like tons of people
Right.
have them, but you really need to like separate the wheat from the chaff, the good from the bad, you know? So what's
Yeah.
something people can look for?
And that depends on the person looking, right? I would say one, who's coaching you?
Hmm.
I mean, I do all the coaching in our group. That's extremely rare, right? Everyone will have sub coaches and things like that. Doesn't mean their sub coaches are bad, but who's coaching you? Is the guy running the group accessible? Do you have like scheduled calls, or can you be ad hoc and really ask questions when you need to get answers, things like that? Will they partner with you on deals? Do they have, like, in my mind, like silly rules like, hey, you can't partner with anyone outside the group, and if you do, I'm gonna, like, blacklist you and things like that. It's really not my business who you partner with.
Yeah.
If I'm not partnering in the deal, you can partner with whoever you want. So people have silly rules like that. Some of the groups require you to pay a buyer broker fee. So they're paying for coaching. They also charge you a buyer broker fee to close a deal, which is, I think, wrong, my
Yeah.
personal opinion. And then just the culture, you know. I like some nice things too, but I'm not flashing all over Facebook and stuff like that. So what's important to me? Well, my wife, my kids, the people in our group. I like cars too, but I don't have to show it on Facebook to show, whatever, what I've accomplished or whatever. I'm not like that.
Yeah.
So the flash and just the culture. We do a cruise, and in June we go on a cruise. People from our group. We're going on a small, actual little yacht here in 2.5 weeks with 3 other couples from our group. So 4 couples total going on that. So just things like that. The family vibe, the environment, people not just doing business together, but also doing life together.
Uh-huh.
It's important to me. It wasn't before.
Yeah.
It was always important to my wife. It wasn't to me. I was doing IT and I was doing, CPA. I didn't really care. I just
Yeah.
there to fix problems. But it's changed my life forever from my own personal family, but also my friendships that I have. So there's people can help you for sure. I'd say don't get caught up in the glam, like someone showing everything they have and things like that. I think it's insecurity, personal opinion, but that's just my opinion. So what are you focused on? Are you
Mhm.
most people initially, me myself included, you're doing it for the money. That's where you start out typically. You're
Yeah.
not doing because I want to give. You might say this and that, but reality is, I had a big fear of money and not having enough and things like that. But hopefully, money will magnify who you are.
Hmm.
Hopefully, as you get more, you give more. It's your personal choice, but we've been able to give more than we've ever been able to give ever, and I want to do it. It's not. I'm not doing it. Like begrudgingly saying, "Oh, I have to do this" or whatever. I want to do it. So it gives you an opportunity to give back. It gives you opportunity, hopefully, to change your life for maybe your wife, your kids, your grandkids, things like that. Opportunity to build huge, net worth. Like you mentioned, cash flow at some point, things like that. But really, be really concrete at what you're looking for. And if you get a weird vibe from somebody, it's usually your gut telling you, hey, maybe they're not the right person. So don't just pick someone because you think they've accomplished what you want to accomplish. There is the character, the integrity, and things like that. In my personal opinion, that outweighs any of the other aspects of it.
Yeah. No, I agree. And that's one thing that always kind of bugged me when I was looking into different mentorships and things is like if you get in with somebody, some of the guys have like sub coaches, so you think you're going to get mentored by whoever it is, Mr. John Smith over here, but then
Right.
really you get into the program and then you don't ever even talk to that person. You're
Right.
talking to people that he's trained to train you. It's
Right.
like, well, it's not really what I signed up for, you know?
Oh yeah, and it
Um,
might only be. And what are they doing? I know a couple other groups out there are buying small multifamily. That's totally fine. That's what they encourage people to. Smallest deal anyone are 87 doors. Good first deal for sure. Largest is 568 units. Good
dang.
deal for sure. So if someone's out there trying to buy 10, 20 units, there's nothing wrong with that. You're better off doing that than doing nothing. But I always ask, why don't you buy 100 units? I want to know. I mean, well, maybe I don't want to partner with anybody. My net worth is this. I'm a control freak. Okay, then it makes sense. If someone says, hey, I'm open to partner with people, then go try to buy a 100 unit deal.
Yeah, definitely. Okay, cool. Well, that's a lot of good information. We could keep diving off on all these things, but like I think podcasts aren't where you're going to go to like learn how to do every step of the deal, but it's where you got to go to like spark the idea and learn the new avenues and then go in a deeper dive to that later. So,
That's right.
what is your favorite resource to learn more about whether, like in our case here in syndications, is it podcasts, books, mentorship programs? What do you think is the best way to go?
We have a mentor,
Yeah.
we have a business coach that we hire and pay, right? And I think it's probably the best, frankly. And you can learn a lot by reading books, podcasts, things like that. But really, it's the face-to-face interaction with people doing. Someone says, "Hey, I've raised whatever $100 million over the last 3 years." Well, I kind of want to know what they've been doing to do that, right? Someone's like, "I
Mhm.
raised $100,000." Well, I'm not going to probably glean that much off them necessarily about raising money. Maybe they're good at something else, but kind of picking the experts in certain areas, like a doctor, right, a specialty versus someone that's just a generalist, multifamily. That's why we're doing some events that are kind of more, one's a 2-day just raising capital, one's a 2-day deal analysis, and the other ones are other events, but they're targeted because everyone, without a doubt, will struggle with one of two areas for sure out of the 14 steps we have. It'll either be analyzing deals or raising money.
Mhm.
Everyone has one of those two areas they struggle with. So that's why we spend more time in those areas, and the other areas we can overcome quickly. And then I don't read as much as a lot of people. And the reason is I get really frustrated reading just because I'm very much get to the point. I don't need a 200-page book. Tell me something. You tell me 10 pages.
Yeah.
My wife reads all the time and she's like, "Oh, read this." I start reading. I get really kind of frustrated a little bit. It's just the way I am.
Yeah.
So I'd much rather pick a topic. I pick topics lots of times and we'll go Google and, look at, 30 different sources on one topic.
Mhm.
And it could be a podcast, could be part of a book, could be whatever. But I like that aspect better rather than listening to one person talk about one topic in 200 pages. I'd rather hear, 20, 30 people talk about that one topic in a lot more concise time, frankly.
Yeah, yeah, for sure. Okay, what about a best, like your favorite app or piece of technology that's helped you in your business or your personal life? Could be either one.
For me too, I would say we use Asana for task management, and
Okay.
you may not need that, but at least for our business, it's been really good. And the other one is just like a Calendly, right? I really did a horrible job of I'm actually really good at kind of just keeping stuff in my head,
Hmm.
who I'm talking to when I'm talking to them, but using some sort of scheduling tool is a lifesaver for me.
Yeah. Yeah, I find that lately too, is that because now I'm getting more and more busy with stuff
Yeah.
outside of
Oh yeah.
my normal life, and like my mind just keeps going crazy,
Oh
right? So
yeah.
it's running in circles. So now
Right.
all I gotta do is look at my phone. Luckily, I have that Google Calendar and my
Oh
Calendly
yeah.
linked up, and it's just like, oh man, it makes stuff so much easier. Which
It,
some
it
people,
sounds small, simple,
yeah,
and at some point you might never need it, right? Depending on what you're doing. But
yeah,
at some point, as you said, the busier you get, it really helps you. Our business coach talks a lot about time management and things like that, which I told him initially before we even start with him. It's something people are like, "Oh, you do all this and blah blah." But yeah, but my time management's not that great.
yeah.
I mean, I was maybe not focused on certain things or like that. So it's helped me become more focused, helped me block out time to get stuff done, which I never did before. Things like that. So you may get to that point, but for me personally, it's helped a lot.
Yeah, well, and real quick on that too is that one thing I always found that if I have a bunch of things, I get analysis paralysis, and I end up not doing anything almost. You know what I mean? Like I have so much to do, but if it's on my calendar, even if it's stuff I dread, I'll see it, and I'm just like, Ugh, well, I have to
Yeah,
do it. It's here. It's on here. I got to do it. Just make the call or go to the appointment. Like it's there. I have to do it.
I'm good at getting stuff done for sure. Some people disagree with this approach, but if I have 20 things to do, people say work on the first highest priority first. If I have 10 things I can do, it's going to take me like a half hour to get done. I get those done. The reason it's a mental thing. Oh, I got half of them done. So lots of times, even though it's not the highest priority, this is my personal thing. I'm not suggesting everyone does this, but I
Yeah.
do. If I can get done really quick with something, categorize it A, B, C, D, whatever, and it's I can respond to an email in 2 minutes. I'm not going to put that off to the side. I'm just going to get it done
Yeah,
when
I
I
agree
do
with
it.
that too. Yeah, that's cool. Okay, what about a mindset tip? You obviously went from your IT world where you're really like just business focused and staying away, not staying away, but you're kind of, not focusing on the family as much. What's a mindset tips that keeps you kind of grounded and keeps you motivated to continue on this path that you're on?
Yeah, I mean, I think it's and not exactly answer your question, but don't compare yourself to other people all the time. I
Hmm.
think that whether it's fitness or whatever it is, right? The fact is, you're built a certain way. God made you a certain way. You have certain things you're good at, you're not good at. So I think getting your mind around that. If I say, hey, I'm going to dunk a basketball, I keep telling myself I'm going to dunk the basketball. I'm going to dunk it. I'm never going to dunk a basketball. Oh yeah, you can't. No, I can't. The reality is, I'm genetically not going to dunk a basketball.
Yeah.
So people say, oh, you can do anything you want, and people might say, hey, Mark, you shouldn't be saying that. If someone says you can do whatever you want, it's not true. So understand what your limitations are, get really good at something, get better at other things, and then tell yourself that I'm going to be the best me. Stop comparing myself to other people. And for me, my mindset was I didn't think that I was going to be able to replace my IT income. I was doing really well in my IT business.
Hmm.
But what I didn't do, whether it's mindset, goal setting, or talk about, I would never write my goals down. And I started thinking about that, talking to our business coach, about maybe 6 months ago. I said, I think I didn't write it down because of the fear of failing.
Yeah. I have the
It
same
really
thing.
was. So, and then he's forced us to write. I can tell you, man, you start writing things down, even from a personal standpoint, things that we've been able to do, even personally, that I probably thought I never would do.
Hmm.
We've been able to do. It's because someone's telling me, hey, he's not forcing me. He's suggesting or telling me these are things I need to do. So doing that, I think, is really, really good. Put it down on paper. If you say, hey, I'm going to buy whatever, $2,000, 2,000 units this year, and you bought zero, I mean, maybe not. If you make it too big of a goal,
Hmm.
then you might be like, oh, I might as well just give up. Like, I'm going to lose 80 pounds this week. Oh, okay. Well, probably not, right? So
Yeah.
the goals need to be realistic. And I'm not trying to tell people to limit their goals, but understand your limitations because you have them as a human being.
Hmm.
And you need to understand those things and stop trying to get really good at something that you're not good at or don't like.
Yeah, definitely. I love that. Okay, cool. Well, where can people find out more about Mark, more about family syndication, and more about Think Multifamily?
So my email is mark at thinkmultifamily.com. And then our website is thinkmultifamily.com. We have stuff about some coaching stuff on there, or events and things like that as well. And people definitely reach out to me. More than happy to chat with people.
Okay, cool. Well, thanks, Mark. I appreciate it. We definitely dove into a lot of stuff, and like I said, we could go on tons of different rat holes about that. But if anybody has any questions, please reach out to Mark. Look at his website. Consider mentorship. That's the way to get to your next level in your career. And I appreciate you being here, Mark. You have a good afternoon.
Thanks, Justin. You too.
All right. Bye bye.
Bye.